All right, welcome back. Happy New Year, everyone. It's the 6th of January today, which is a Monday, and I should be at work, but I got back from Naples in Florida over the weekend, and my body clock is still not good. I had a bit of travelling to do when I got back as well, so I'm feeling a bit out the loop today. But I just literally got back there to the house. So I've just opened the laptop and I was just looking at a few things and setting some targets. And I thought I'd do a video on a little, not a strategy, but just a thing if you're looking at charts this year to keep in mind. So obviously last year wasn't as good as we thought. I mean, it was still good. For me, I've basically 5 times my portfolio last year, which is pretty good. Well, really good actually. Um, and we had a decent year. We'll say a decent year. For things like Bitcoin, if you were just holding Bitcoin, let's see, we started the year around the 40k level, and obviously this year we've started the year around the 95 to 100k level. So big gains there if you were just holding that. But if you were holding things like altcoins, let's say for example like FET, I mean I was buying down at these levels, so partly I have like 5 times my portfolio, but I also told people to buy around the $2 level, which was a mistake on my end. That's just getting overhyped. That's not really looking at the market structure, and I've learned a lot from that. Obviously, it's been a bit of a rough year. If you bought kind of at the February, March, April time, um, what kind of the backup net for me was buying at these levels as well as buying these, so I still made good money. If you are if you did buy like February to April, May time, on some assets you'll be up, on some assets you'll be down. For example, FIT. Um, I think this will still perform really well, as you know. So just keep buying, keep dollar cost averaging in, and get, if you bought here, then try and buy at these levels or even these levels, and your price will slowly trickle down. A bit like what happened with Doge. I mean, I was buying up at point 0.4, and then it dropped all the way down to like point 0.2, point 0.3. So I'd also bought more here, and now at 0.38, even though I bought my first load at like 0.42, I think. I also was buying it down at like 0.3. So now when we're at sitting at 0.38, my average buy now is about here. So overall on all that, I'm up about 12%, which is decent. So that's the beauty of dollar cost averaging. You can't always time the market perfectly, but if you're buying solid assets, then I think you'll be all right. Anyway, what was I gonna? I'm gonna talk about supply and demand, which you've probably heard of before in business or like COVID and stuff like that. You know, the supply and demand of things like food or things like petrol or gas, whatever you want to call it, has gone up. Electricity, that's supply and demand, and when there's a supply and demand crisis, then prices rise. But in markets, it's a little bit different to that. It does involve pricing, but it's not as much related to like the inflation of assets. It's more like zones on the chart. So we'll look at like Bitcoin for example right now. So I've got this indicator which shows you like the wick fill strategy, which I've spoke about I think on the course, but also I think I've just spoke about it in general. So you can probably look back on this somewhere and find it. I'm not really sure where it is, which isn't very good. I'm pretty sure it's in either the Learning Hub or else you can read through the course and find it. So there is the wick fill strategy. If you want to read up on that, then it's there. That's about kind of liquidity stuff. But what I'm going to teach you about today is using the Fibonacci or fib retracement tool, which you can find if you go into TradingView, go on the third one down, and then fib retracement. So I'll open this up on a bit of empty page, and this is the fib tool. So I think I think when you first open this, it's got loads of different ones, but you can double click on this, like here, and add in your own stuff. So normally, I don't really need that. Normally what I run with is the 0. The 0, the 0.25, the 0.5, the 0.69, the 0.75, and I think somewhere else is the 0. Oh, it's right there, 0.786. Obviously your number 1, and then the 1.618, 2.618, etc. So the ones that really matter to me are these ones. Where's my pencil? The ones that really matter for me is the 0.5 and these two. If you're going to have anything on, have these two. And I'm going to just take the rest off for now. So 0.25 can go, 16 can go. I'll keep the 1. So these are your most crucial ones in my opinion. And to draw Fibonacci, you literally go to the chart. In fact, what will we do it on? Give me something nice. Alright, so to draw one, you click on it, and the way it works is like your first click will be your first point, and then your second click will be your second point. So the way I normally do it is to the very top wick in this move, which is here. So you can kind of click away from it, but the little lines that you see on the chart will help you with this. So you can click there and drag it down, and then also click to the bottom wick of the chart. It doesn't need to be bang on perfect because this is just like a guide. So if you've got it maybe like this or something, it doesn't matter too much, but I always try and have it like so that the lines meet. So you'll probably notice here that I've marked out the 0.5 already, and the way that it works is in this move, if I just remove this here, in this move here, then these two zones, the 0.75 and the 0.5, are telling me where it might turn around or where it might use as support. When you've got quite a messy chart like this, or somewhere that's in, fresh water, where, I mean, Doge's probably not been in this zone apart from like way back here. So you can't really use much from here support wise. So it's kind of hard. So that's where the Fibonacci comes in handy, and it will kind of tell you where your zones are without using like previous supports. So that might be a bit confusing, but all you really need to know is how to draw it, and then how to map out stuff and how to understand it. So to me, I would then be using this as a supply zone. So this box here, that's a big supply zone, as well as anywhere around the 0.5. So I'm going to map this out in a little drawing, because I can use this chart, but it's a little bit confusing when it's already there. So let's say in fact I'll draw something first. Apologies. I just want to make this as understandable as it can be. So let's say that's your chart. Okay, so then you've got the top to the bottom, and that's all you've got to work with right now. Obviously that's lined up kind of perfectly to 0.5, but in fact we'll use that because that's probably pretty good. Also, I didn't mean for that to land exactly on that and exactly on that. So if this is how your chart looks right now, which on some charts it does at the moment, you can basically look at this 0.5 as a potential reversal zone, as in price will then come up to it and stall under and then come back down. You can also look at this as a potential support. So assume the 0.5, if you're below it, then the 0.5 is going to be your new resistance. So always assume that, and always expect price to do that and come back down. If price then gets above it, then you can use it as support. And if it starts to stall above the 0.5 zone, then it's using it as support. Then if you're trading, then you could basically say, right, well, I'm going to open a long if price is here, and I can have a tight stop loss just at the 0.5 or even just under, and then you can probably put that into the next supply zone. So then you're risking, obviously this is a bit different and scale wise, but then for example, if you took a trade there, you're risking 3.5% to make 16.5. So your risk to rewards is about 5 there, or 4.71, which to me is worth it in a trade. So that's one way that you can use the 0.5. You either use it as somewhere to sell. I would always try and sell some at the 0.5. If price starts to stall again underneath it, then you can expect the price to go back down, and then you can maybe buy back at like this support zone, or else just wait and see how the market plays out. If the price gets above it and starts to chill up there, then you can buy, like say you sold when it reached here, and then price got above like a few hours later and started to chill there. You can buy back in here. You can buy back in there, and then, as I said, set your stop loss, or look to always sell if it breaks this level, if it breaks the 0.5. So if price goes back down there again, then you try and sell. You can set limits or whatever, or stop losses if you're trading. Hopefully that's all making sense so far. So that's the 0.5. So let's say in this scenario you get above it and you start chilling up there. To me, that's a sign of strength. It doesn't always work, and in trading nothing ever really works, but you can use these things to kind of guide you on your way. So the 0.5 here, you've kind of held above it. The next stage, so that's a demand zone. So then you've kind of conquered that demand zone, and you're looking to the next one. So then the next stage I would be looking for is somewhere in here. So I'm kind of expecting price to then trickle up to this. This is then another pretty solid supply zone, and I'll show you some examples of this because it's probably quite confusing, but anywhere around this zone I would be looking to sell, because to me, looking over charts in the past, the 0.5 to the 0.786 is always somewhere that the chart reverses, probably more than the 0.5. And I'll show you some examples of that as well. So if you're trying to think of trading, or something's went right up and you don't really know where to buy or sell, this is something that's always pretty good, and this is supply and demand. So I'll show you some examples on a chart. Let's take OXO for example. So I've just sold some of this here because I was quite heavily positioned in it and I wanted to take some profits off the table. So I've literally just sold some like before I've started, and I don't know if this will continue, but it's already started to reject quite badly from this. So yeah, we'll draw a fib on this, and I'll tell you why I sold. So, or you'll see why I sold. Top of the wick to the bottom of the wick, and there's your zone. Exactly there. In that zone is where I sold, and so far, it's going as planned. Obviously we have the 0.5 here as well, which if you look at on the probably hourly chart, if I take this away, you probably see it a bit better. So there's the hourly. We did hold up pretty good when we got over the 0.5, as you can see here, but we also went below it. The good thing is we had support around this level, so that's another thing you can look out for. If you've got support around this level, then you can open a trade at the 0.5, which I would probably have done there, and then you just set your stops to below that, and you're aiming for up here. So that's a bit more of an open trade here, and I probably wouldn't have done that, but that's just the kind of scenario that you need. You need to basically add everything in, so your support, your resistance, as well as things like Fibonacci's, and all these tools kind of work together, and if you find confluence with them, then you can go with it. So here the 0.5 held it, kind of fell under it again, got above it again, sign of strength again there. in reality, if you bought between 0.33 and it goes down to 0.315, you're not really that bothered as long as it gets back above, which it does, and then it goes for that that big jump from the 0.5 up to that zone, which it's done there, and that there was 15%, which is pretty decent. You can see how hard this is rejecting here. Also a nice pattern of rejection here, just whilst we're at this. Usually when you come into resistance, one sec, I'll show you this. Come on, get out of the way. So I'll just show you this quick. So if this is your resistance line, how to tell it's kind of rejecting is a push above and then back in and down. This is called a deviation, which I don't want to bog you with too much information, but a deviation is basically when it goes by the resistance, so that then people think it's broke through it, and then people buy in or along here, and then it breaks down. And you always kind of want this pattern, and the same with buying as well. If something kind of breaks through support and then comes back above, you always buy on the retest, and you always try and sell on the retest. That's called a deviation, just quickly there. So I'll try to show you some other examples. I'll clean this up a bit here. Give me a sec. I don't want to ramble too much, but it takes a wee bit of explanation here to kind of get my point across. Here we've got Bitcoin, just as of recent, literally happening right now. If we take that away, we draw our fib from the top wick to the bottom. You've got your 0.5, which is round about here, and then we've rejected off that literally today. Which is another reason that I sold, because Bitcoin was technically under resistance there. I'm not sure what will happen. I think the stock market's just opened up, so you always expect a bit of volatility when that happens. But if we can get above this level in Bitcoin, then I would be aiming for up here, and that's where I'd be selling. We can go back in time, which is always what I try and do, and you can do this as well. Just go back, practice drawing them, go on like the daily chart and just practice drawing Fibonacci's, and you'll find a lot of the time, let's take here for example, we'll go there, go back, the 7.5 is where we start to reject, and then we come back down. Another example, I'll just find some random ones. Let's see, here for example, the top, the bottom, the 7.5, there's your demand zone, 2 wicks into it and then back down. Just try to find some more. And it also works, like it depends on the market. So like here you're kind of doing massive big stretches up, but I'm not sure if this will work. There you go. So then your bottom, you can also do it the other way, so your bottom to the top. So the bottom of the move here, top of the move here, or just circle that quick. Bottom of the move, top of the move, 0.5. And then we go. So as I said, you can use it as support as well as resistance, which is nice. Literally I've not ran through this before. I'll just scroll so randomly back to God knows when. Try and find somewhere where you'd probably trade. Let's see. Let's try here. I'm not sure how any of that will work, but there's not really much in there. But as I said, it depends on the conditions of the market. I mean, when you come into stuff like this, market structure and ways to buy kind of goes out the window. I think this is when Putin invaded Russia, so things like that are kind of hard to look at. But there's another one there, top of that move to the bottom of that move, your 0.5. So hopefully you understand that. It is quite a lot to take in. but it also like really helps. In my opinion, it's probably one of the simplest ones that you can do. You can kind of go back in time and just see, as I said there, 0.75. You see it quite a lot. You can go on to things like, I'm not sure if it works on stocks. I've never actually tried it on stocks. But stocks is kind of one of those ones where it's always just kind of going up. So we'll try it. We'll see. I mean, there's your bottom of the move to the top of the move, back on the 0.5, literally bang on the money there, to the point. So when you see stuff like that, you kind of get reassurance that this does actually work. Let's try it on another one. These are obviously a bit different because they're always kind of going, but there again, bottom of the move to the top of the move, 0.5 there. So you can go about, go on any chart really. You can see how this works. It's really good when you start looking into it and start seeing different examples of it working. So for example, right now I'm still in Doge, and I'm looking at the reason I'm still in here is because of this, where the top to the bottom and then the 0.5 is here. So to me, my invalidation right now is if we lose this box, which we might do, because if you look at other things like your EMA and even this whole zone here hasn't really been revisited. So no guarantees it will hold this, but if we start to break down, then I'll sell, and I'll still sell for a bit of a profit. But I'm kind of looking here to hold this up to here, and then my average would be roughly about 25% on that. I don't have a sore throat, by the way. It's just like the aircon in the planes. I don't know if any of you get that, but you kind of get like a mad cold after it. It's like weird. But anyway, that's not a quick video. It was a bit lengthy, but just trying to explain that to you, using the supply and demand zones. So get them on your chart. The fib is really good for targets as well, and everyone kind of uses them, so they just work. So get this on your chart and start playing around with it, start using it, and you'll start to find that you start to find your own levels and start to see what works and what doesn't. And it's just for peace of mind as well. It's nice to have kind of zones marked out in the chart and see when you need to buy, when you need to sell. In a market like this where it's a bit up and down, kind of gives you a good example of where to look and where to try and buy and sell. So hopefully you all had a good new year and have a good week back at work. I'm back tomorrow, so today I'm just chilling. I thought I'd do a wee video because I've not done one in a while. So any questions, let me know in the general bit, and hopefully enjoyed that.